How financially painful are today's rising prices, and will inflation morph from just a budgetary headache into a significant monetary impediment? Worry. Will the worst bout of inflation in 4 decades make people too cautious about how they spend and invest? Stay tuned because you will find out what this recession means to you. Welcome back to Recession Preppers. A recession is a marked slippage in economic activity, according to the U.S. Bureau of Economic Analysis. You can think of it as a downturn or contraction, or the opposite of an expansion. Whatever you call it, a recession can impact your finances. Economic expansions create opportunities, new businesses, more jobs, and higher wages. Recessions eliminate opportunities, failed businesses, fewer jobs, and lower wages. Recessions usually don't happen every year, but they're not unusual. The National Bureau of Economic Research has tracked recessions in the U.S. back to 1857. The most recent recession occurred over 10 years ago, from December 2007 to June 2009. Since 1945, there have been 11 recessions, which lasted 11.1 months on average. The shortest was 6 months, the longest 18 months. The prospect of a recession which may or may not occur in 2022 is no reason to panic. Since downturns happen cyclically, each presents an opportunity to learn and prepare for the next. Thoughtful planning can help you and your family get ready for the next recession, whether it occurs in 2022 or further into the future. Why do recessions happen? Recessions occur because the U.S. economy is cyclical. Economic activity expands until it reaches a peak of performance. The expansion then falters until it bottoms out in a recession. The activity begins to expand again. What goes up must come down. A May 2019 Federal Reserve research note observed that recessions are notoriously difficult to predict. Economists use charts to identify patterns in economic cycles that may explain why recessions occur, why some are more severe than others, and when the next one might happen. Specific economic indicators are fascinating because they occur just before economic changes. For example, this chart from the Federal Reserve Bank of St. Louis shows economic recessions and the 4-week moving average of weekly initial unemployment claims, a leading indicator from 1967 to the present. The Federal Reserve plays a unique role in moderating economic cycles. By adjusting the federal funds rate and taking other actions that affect the economy, the Fed can try to soften a downturn so that it might not be as severe as it would have been without the Fed's involvement. What happens during a recession? Recessions can have a wide range of effects on individuals and families. Job losses. When economic activity slows, businesses eliminate jobs and curtail their expenditures for advertising, training, product research, and other operations. Payrolls shrink as companies eliminate jobs to lower their costs. Continuing your education, networking with your professional peers, and staying up to date on trends in your industry could help you if you need to change jobs during a recession. Health consequences. According to the Social Security Administration, the most recent recession in 2007 to 2009 had multiple consequences for workers who lost their jobs. Job losses impacted not only workers' employment but also their health insurance coverage, retirement savings contributions, financial security, and health-related behaviors and outcomes. Workers who lost their job were more likely to receive government safety net assistance, like disability insurance and supplemental security income benefits, even after the recession ended. Student loans. Recessions can have long-lasting effects on younger adults, who may experience unusual difficulty finding or keeping a job during a downturn, says the U.S. Bureau of Labor Statistics (BLS). Moreover, any delay in employment can reduce asset accumulation over their lifetimes, the BLS said in a June 2019 report. Higher levels of student loan debt can compound these recession-related challenges for younger adults. Paying down student debt now can give you more financial flexibility if you're unemployed or need to accept a lower-paying job during a recession. Opportunities. Recessions don't affect everyone the same way. For instance, some businesses are said to be recession-proof, which means they tend not to suffer as much during a downturn. Examples include disaster cleanup services, car repair shops, hair salons, and other goods and services that people need regardless of the economy's ups and downs. Do you love the Recession Preppers channel? Then make sure to subscribe to our channel and leave this video a like if you enjoyed it. So, how can you prepare for a recession? Boost your savings. If you lost your job tomorrow, would you have enough savings to pay your bills for 1 month, 2 months, 6 months, or maybe even a year until you found another job? If you don't have at least 6 months of expenses in your savings account, start building up your savings today. The more you save, the less chance there will be that you'll have to max out your credit cards. Raid your retirement accounts, sell your valuables, borrow from your friends, or move in with your parents or adult children if you're out of work. Pay off debt. Paying off debt lowers your monthly interest expense and frees up income for other needs. It doesn't mean you should avoid all debt forever. Instead, it would be best to focus on debt that improves your financial situation. In times of uncertainty, you shouldn't borrow more than you can afford to repay on a reduced income. Refinancing to a low-rate mortgage may make sense, and stay away from maxing out high-rate credit cards, which never makes financial sense. Prioritize purchases. Start by thinking about what you need versus what you want, like that expensive vacation, a new car, or eating out at restaurants. Even that daily latte can add up over the month. Review your budget and decide which items you can eliminate or put on hold. This could save you thousands of dollars per year. Learning to get by with less is the key to recession-proof living. Recession-proof your career. If your job doesn't feel secure for the long run, consider updating your resume, learning more marketable skills, networking with friends and colleagues, and trying to get a promotion or more secure job lined up. A second job or side hustle in the gig economy can also help you survive financially if you lose your job or your employer reduces your wages or hours during a recession. Recessions can be financially painful, but given that historical pattern, it's likely that you'll experience a few of them during your lifetime. Planning can help you survive and support your family whenever the next one occurs. So, how will you plan yourself during the recession? Let us know in the comment section down below.